Welcome to Wise Wealth Wisdom, the path to success, your one-stop shop for personal development, motivation, and wealth. We believe that everyone has the potential to achieve great things, and our goal is to help you reach your full potential. The future holds uncertainties, and unexpected financial shifts like sudden spikes in inflation can greatly affect your financial stability. However, there are 11 immediate steps you can take to address these challenges. Let's start by cutting down on your expenses. As inflation persists, grocery prices continue to climb without showing signs of slowing down. To mitigate the impact on your finances and save money, it's crucial to devise a food budgeting strategy. Comparing your budget with the USDA's food spending plans allows you to assess your current spending habits and make necessary adjustments. According to the suggested averages provided by the same authority, monthly food expenses for males aged 19 to 50 vary. $278 for those on a low budget, $348 for individuals with a moderate budget, and $427 for those with a high budget. These figures serve as illustrative examples to offer clarity. Now, prioritizing cost-effective options is crucial. Take into account cutting down on your meat intake, as experts note that meat prices are especially susceptible to inflation. Introducing meatless days into your meal rotation can aid in reducing grocery costs. Furthermore, concentrate on crafting meals centered around economical staples such as eggs, rice, pasta, potatoes, canned beans, and frozen foods. Choosing generic food items over branded ones can also lead to substantial savings. To curb impulsive spending, devise a meal plan and refrain from purchasing takeout meals. When cooking, explore recipes that make use of ingredients already stocked in your refrigerator and pantry. Finally, establish a shopping list and strictly adhere to it. Bring only the necessary cash to cover your estimated grocery expenses to deter impulsive spending. To offset the impact of rising gas prices on your budget, contemplate reducing your driving. Whenever feasible, opt to work from home to save money on fuel costs associated with commuting, while also reclaiming valuable time. Embrace alternative transportation methods like walking, biking, public transit, or eco-friendly modes of travel to economize on transportation expenses. Explore options such as carpooling and consolidating errands to minimize fuel consumption. Take advantage of loyalty programs offered by local gas stations to access discounts. Additionally, investigate ways to lower your car insurance premiums by assessing eligibility for reduced rates based on factors such as credit score and driving history. Take proactive steps to tackle credit card debt, especially given the rising interest rates amid inflation. Paying more than the minimum amount can expedite the repayment process. For those with a good credit standing, consider options like balance transfers or debt consolidation. These strategies can lower interest payments and streamline repayment by consolidating debts into a single monthly installment. Perform a comprehensive examination of your budget to pinpoint areas where you can trim expenses and allocate funds more effectively. It's crucial to conduct regular budget reviews, as your spending habits, goals, and financial responsibilities may evolve. With inflation putting pressure on financial resources, it's wise to periodically reassess and audit your budget to ensure it reflects your present financial circumstances. Evaluating your current financial situation and adapting your savings strategy accordingly is essential. Are your current financial objectives and spending patterns still aligned? It's crucial to assess whether you're staying within your budgetary limits. If you've established spending caps for various categories, consider adjusting them to ensure proper allocation. Conversely, if you're exceeding your budget, reassess your overall expenses. If discretionary spending is dominating your budget, it might be necessary to reconsider your priorities. To boost your monthly cash flow, contemplate trimming discretionary spending and reallocating those funds toward establishing a vacation fund. When combating inflation and aiming to save, it's wise to strategize for cost-efficient vacations. Fluctuating airfare prices and escalating fuel costs contribute to increased vacation expenses. Furthermore, inflation may drive up prices for accommodations and dining, amplifying the overall cost of vacations compared to previous years. To mitigate these expenses, consider postponing vacations when feasible or exploring local staycation opportunities. Opting for nearby destinations enables visits to local attractions, dining at nearby restaurants, and embarking on day trips, all of which offer more budget-friendly alternatives to international travel. Vacations provide a precious chance for relaxation without burdening your finances with overwhelming debt. Nonetheless, it's crucial to meticulously plan your trip and select a budget-friendly destination. Moreover, booking flights ahead of time and utilizing airfare comparison platforms to identify the most economical options, especially those offering flexible travel dates, can significantly enhance your savings. Exploring real estate investment is a potentially lucrative opportunity for numerous individuals. However, it's imperative to approach this endeavor with thoughtful deliberation. Acquiring property should be viewed as a long-term commitment rather than a quest for quick profits. Real estate investments usually don't generate instant returns. They demand patience as the value gradually appreciates over time. When buying a house, you'll typically be required to make a down payment and secure a mortgage for the remaining balance. Despite these initial expenses, investing in a home remains one of the most potent strategies for combating inflation and establishing long-term savings. Home values typically appreciate over time, serving as a safeguard against inflation. Thus, if possible, it's advisable to consider investing in a home at present. To further counteract the impact of inflation and strengthen your savings, consider high-yield bank accounts. While these accounts may not entirely outpace inflation, they can act as a buffer against its effects. Take the time to research banks that provide competitive interest rates on savings and compare their offerings to determine the most suitable options for maximizing your returns. Although the average annual percentage yield, APY, for bank accounts generally remains around 0.06%, certain institutions offer higher APYs, even reaching up to 1%, as reported by the Federal Deposit Insurance Corporation, FDIC. Choosing a bank that matches your financial objectives and offers competitive interest rates is crucial. Another effective strategy for navigating inflation and readying yourself for an uncertain financial future is self-investment. This entails enhancing your skills and knowledge through high-quality education and ongoing learning. By investing in education and skill enhancement, you enhance your earning capacity and stay competitive in a dynamic business environment. Continuously improving your skills allows you to capitalize on emerging opportunities and secure higher income levels over time. Ensure the resilience of your career during economic downturns, and enhance your income prospects, even amid inflationary periods, by staying ahead of industry trends. Investing in your ongoing learning and development ensures that you maintain competitiveness amidst evolving requirements. To counter inflation and protect your financial stability, prioritize self-improvement to stay abreast of the latest developments and optimize your earning potential. Establishing an emergency fund is essential for navigating unexpected financial challenges. Despite the temptation of investments, experts recommend prioritizing funds for an emergency reserve as a foundational measure. This precaution serves as a buffer against the impacts of inflation and offers a safety net during periods of uncertainty, such as economic downturns or job instability. By diligently setting aside funds for unforeseen expenses, you reduce the likelihood of depleting your savings or relying on loans during emergencies. Before setting up a sturdy emergency fund to safeguard your finances from unforeseen crises, ensure you clear your debts. Prioritizing debt repayment is essential to prevent financial vulnerability during unexpected events. Start by promptly settling any outstanding debts, then shift your focus to constructing a rainy day fund. This fund serves as a buffer against inflation and fortifies your financial stability. Don't overlook variable debts. Addressing them is paramount. Whether it's personal loans, credit lines, or variable rate mortgages, allocate resources to pay them down. Before considering investments, prioritize debt reduction to mitigate high interest rates that could impede your financial progress. Even with enticing investment opportunities, debts with interest rates as high as 16% pose a significant obstacle. The longer you delay debt repayment, the more entrenched you become, as interest payments prolong the debt cycle. Make debt reduction a priority, placing it at the forefront of your monthly expenses before considering other purchases or investments. Think about investing in bonds for long-term savings, especially if you won't require the funds for at least a year. However, it's important to maintain your emergency fund to provide a safety net for unexpected expenses. Once your emergency fund is established, consider purchasing treasury bonds. These bonds operate similarly to deposit certificates. Investing in them for a year ensures a return rate typically higher than the current inflation rate, thus protecting your capital from depreciation. In the midst of changing economic circumstances, evaluating your current internet and telecom services is crucial. In the initial phases of the pandemic, prices for wireless and telephone services experienced minimal hikes, providing some relief to consumers. Certain service providers even temporarily suspended data caps. However, with the escalation of consumer prices, some providers have started reapplying data caps and increasing prices. To offset the rising expenses associated with telecom and internet services, contemplate transitioning to more cost-effective cell phone plans. Additionally, investigate federal programs tailored to aid low-income families with internet bill payments. I hope you encounter fascinating experiences and gather even more valuable insights as this discussion concludes. Thank you for being with us, and remember to subscribe for further beneficial advice to enrich your journey in life.